After 6 successive hikes, the Reserve Bank of India has decided on June 8, 2023 to keep the repo rate of 6.5% unchanged. While this was music to the ears of home buyers and those paying the EMIs, the question here arises, how long do home buyers need to wait to see a fall in their loan amount or EMI burden? When will home buyers see a fall in EMI prices? Right now, in top banks, interest rates hover between 8.7% to 9.65%. The country's largest lender, State Bank of India, is offering home loan at 8.85% per annum for up to 30 years tenure. Kotak Mahindra Bank 8.65% per annum onwards up to 20 years, and Bank of Baroda 8.60% per annum onwards for up to 30 years.
Retail housing finance markets have always been very competitive since the housing asset represents long tenure, high quality, high ticket size, and low delinquency assets. It's also preferred by regulators and authorities since they enable the borrowers to improve the quality of life. Hence, banks and housing finance companies compete aggressively on this asset class.
You must know that repo rate is the interest rate at which the RBI lends money to the lenders such as banks. The higher the repo rate, the higher the cost of borrowing for the lenders from RBI because of the upward change in the lending rates. So generally, when inflation increases, the RBI increases the repo rate to prevent lenders from borrowing. Similarly, when the RBI lowers the repo rate, the lender's cost of borrowing comes down because of the downward movement of lending rates. Borrowers benefit from this downward movement in the rates as lenders pass the rate cut benefit on to them.
The RBI's decision to maintain policy rates signifies a very cautious approach from their side. I think what RBI is trying to achieve is manage the inflationary pressures in the economy and to support economic growth. Let's accept the fact that the rates in the last 1.5-2 years have gone up by about 200-250 bips from a 6.5% home loans to we are about 9.5%. There's been a significant increase in the EMIs, right, resultant in maybe about 180 to 190 rupees per lakh EMIs moving up. Right. The market and the experts expect a reduction in the next review from the RBI side. Maybe a 25 bips or a 50 bips reduction will significantly ease the economic burden, right? And if I put it in numbers, maybe a 25 bips reduction would lead to a 1,000 rupee reduction on the EMI for 50 lakh rupees loan. I think that's what all of us are expecting from RBI.
Most economists believe that MPC will keep rates on hold till this year to focus on the inflation target falling to 4%. However, MPC is watching two critical factors. One is how the monsoon will pan out and how is the global economy will evolve to decide the future rates. The Fed has left interest rates unchanged right now, has hinted at possible rate hikes further.
Considering the micro and macro aspect of the economy, today RBI took the decision to keep the previous policy rate unchanged. This is extremely positive step for the real estate industry. As a real estate company, we truly appreciate this policy approach. It shows that the RBI understands the challenges we face and is dedicated to creating an environment that promotes growth and investment. Additionally, this decision is a great relief to home loan borrowers. The previous interest rates hike were well received. As long as home loan interest rate stay around 9% per annum, we expect minimum impact on housing demand. This stability will be helpful for developers and home buyers both.
According to the NROC research, housing sales in the first quarter of 2023 scaled to the 1 lakh mark at 1.14 lakh units across the top 7 Indian cities. For more such videos, keep watching Money Control.